Good morning or good afternoon, depending on where you're joining us from. Thank you for taking time out of your busy day to join us for a very, what I find to be interesting conversation around nuclear energy. My name is Brandon Rekshosky. I work in the product group at VanEck, and I'm joined by my colleague, Coulter Regal, joining us virtually here. Coulter, thanks for jumping on. Good to see you. Good to talk with you.
Yeah, happy to be here. Excited.
So as everyone who registered for this webinar is acutely aware, I'm sure there's been a significant renewal in interest in the nuclear energy segment of the electricity market. A lot of that is being driven by geopolitical factors, tech investment, association with AI, a lot of different headlines hitting the wire seemingly every day around nuclear energy. And we at VanEck are seeing quite a bit of interest increase for our ETF offering here in the US that targets nuclear energy, the entire ecosystem. We've seen questions come in more and more frequently over the last several months. Trading volume has increased in our ETF and of course, investor flows. So we thought it would make sense to host a bit of a flash webinar to touch on some of the themes that are playing out in the space, why there is quite a bit of tailwind behind this investment opportunity, some of the driving forces there, the general investment case essentially. But we also want to touch on some of the risks that we're talking about with market participants, analysts, companies, and investors alike. So we hope to cover a lot of good content on today's quick webinar. We've got about 30 minutes of time. But before we jump into today's content, for those that are unfamiliar with VanEck, I did want to mention very briefly a little bit about our firm and where we fall within the broader investment landscape. We're an asset management firm that's been around since the 1950s, and we have always prided ourselves on identifying trends and acting on those trends and offering investment opportunities to investors early in cycles. That goes back to post World War II when we offered one of the first international equity mutual funds to U.S. investors to participate in post World War II European recovery and resurgence. Fast forward to the late 60s, we pivoted to gold just ahead of the hyperinflationary 1970s, where before gold was really even a meaningful part of any investor's portfolio. And then, of course, in the early 2000s, when we entered the ETF industry, VanEck manages over 100 billion in assets globally. We have offices, of course, here in the U.S., but also in Europe and Australia with a lot of, very rapid growth profiles. The majority of assets we manage are in the ETF wrapper, and many of those cover natural resources, equities exposure, which is a lot of what we'll talk about here today. So a little bit about VanEck, so you know who you're hearing from, why you might be hearing from us. A quick reminder before we get into some more content, we will have questions throughout the webinar, and we encourage you to submit those questions in your Q&A window on your screen. We'll try to hit as many as we can within this 30-minute time slot. So please keep the questions coming, and we'll try to touch on as many as possible. So, a bit about what we're going to cover briefly today is kind of threefold. We want to talk a lot about the various opportunities across the nuclear energy ecosystem, because there's so many dynamics at play here. It's not as simple as uranium prices go up, these companies go up. There are many different factors that influence potential investment in the nuclear energy ecosystem. We believe a comprehensive, diversified approach is one way to mitigate risk and really participate in a meaningful way in any potential moves in this market. And of course, the investment case for investing in nuclear, the increasing demand for electricity and clean energy is really a driving force behind demand here for investment, which has also spurred policy support. Many countries have renewed policy support, and there's some new support in various emerging markets throughout the globe. So those are all driving forces behind much of the interest in nuclear investment over the last several years. So let's start off by diving into that investment case, the drivers behind why investors are considering nuclear energy and why it may make sense in their portfolio. So Coulter, why don't you jump in and talk about this immense increase in the need for electricity and what has unfolded in recent years?
Yeah, absolutely. And I think this is the perfect slide to kind of tee it up on, because ultimately, what's driving much of this demand for, nuclear power and just power in general is just the increasing electrification of the world. And we'll get into, sort of the drivers of data centers and the emergence of AI and what that means exactly for, demand for electricity. But I think even to set the tone before that, I think you kind of have to think about, you know, I think in general, the world is sort of electrifying, on its own anyway. So there's a lot of, various drivers of, demand for electricity. So anything from, sort of emerging markets developing, so India, China, as people kind of move into the middle class, they want the comforts of life, electricity and electric vehicles. And so there's already sort of a very strong backdrop of increasing electricity demand, that's already sort of there. But sort of more recently, we've seen sort of the advancement of the Internet of Things, and everything's being digitized and put online. And ultimately, what that means is large data centers that are needed in order to facilitate that digitalization of the world, really. So that's already so very strong tailwinds already in the background of electricity demand. But really what is catching everybody's interest now is sort of artificial intelligence, and what does that mean for electricity demand, of its own? Because if you think about it, it's sort of been a year and a half of sort of a whirlwind of activity around AI, and it really doesn't seem to be going anywhere. In fact, it seems to really just kind of be advancing, as there's almost like a computational arms race, if you will, between these sort of mega cap tech companies like Google, Amazon, Microsoft, all trying to vie for as many chips as they can get, which means more power, bigger data centers. And so I think that's really what this kind of comes down to. So when you look specifically at data centers and AI and their demand for electricity, which is really sort of the most emerging element of increased electricity demand, this chart here shows basically kind of two things. I think if you look forward, so this shows kind of current and past electricity power use of data centers, and also is a projection forward based off of various AI elements. So you can see in the top, it shows a little bit of AI shaded there, but ultimately this chart is showing a big expected increase in demand for electricity to power these large power hungry data centers. And then AI later on top of that only adds to that demand. I think also coupled with that is sort of the nuance of sort of not decreasing, efficiency, but slower efficiency gains. So while we're still gaining efficiency, the pace at which we're gaining efficiency in these data centers and these chips is actually slowing down a bit. And I think a big part of that is actually related to just the immense amount of power that these new, heavy computational AI, queries require. So we actually came across an interesting stat that I think kind of helps put it into perspective a little bit. And that's, a single, chat GPT query, right? A more complex one to be fair, but, it requires much power, that a 60-watt light bulb would use in 20 minutes. So essentially one query on GPT, uses the same amount of energy to power a light bulb for, nearly 20 minutes. And we actually, interestingly enough, put this question into GPT itself and asked it what it thought of this claim. And it actually said it was a relatively, fairly accurate claim, depending on various factors. But it's interesting to note that it's just, something so simple as typing in a query in the GPT can actually use the same amount of power that a light bulb would require for about 20 minutes of use. So I think really what this comes down to is, sort of the growing outlay of demand for electricity is pretty evident. But the question is, how do you power all of it in a clean and reliable way? And so I think that's where a lot of, nations and large corporations are now starting to kind of look to nuclear power as sort of that way to satisfy this demand for electricity.
Yeah, it's fascinating, right? So you've got this dynamic of increasing demand. It's really hard, I think, to estimate, right? How do you even estimate demand moving forward? So, you try to rely on various banks, research groups, trade organizations, et cetera, to kind of estimate that demand and where it can be met. But even if you don't have this estimate, you just see it playing out in real time. And we'll touch on this in a moment here. But when the largest tech companies in the world, and they just so happen to be based here in the U.S., are announcing these aggressive investments and partnerships with power utilities and other very innovative companies, it's like proof in real time that they're personally these organizations, these companies are worried about where they'll get their electricity from, and ensuring that they've essentially shored up the supply chain for future demand. So it's really incredible to see it all play out. So there's clearly increasing demand for electricity moving forward. So how do you meet that demand? And particularly, how do you meet that demand when the entire globe is moving toward cleaner electricity and power sources? So the global energy transition, right? So you need to produce more power, but do so more efficiently and effectively from an emissions perspective. And nuclear, which has long sat in the background really in this conversation as more and more investment have gone towards solar and wind and hydro and other clean renewable sources of energy, it actually emits less from a greenhouse emissions throughout its entire life cycle than many what are thought to be the cleanest, most renewable energy sources on the planet. So nuclear fits very well in that conversation, and this is essentially the second key driver to the investment case behind nuclear right now. It's very clean, and as the world is transitioning to clean and renewable energy, it's focusing more on intermittent energy and power sources like solar. It gets dark at night, it gets dark when it's cloudy, and wind when you can have calm breezes in the air when power just cannot be generated based on some of these renewable sources. So not only is nuclear clean, it's also very efficient in terms of its capacity factor. So, nuclear power plants can essentially run 24/7. So this is a bit of the best of both worlds, right? When you're talking about nuclear energy within this greater conversation of meeting electricity demand, but doing so in a clean and efficient manner. It fits really well into that wheelhouse. So increasing demand, and then it checks a lot of the boxes when it comes to meeting that increased demand. Coulter, any other thoughts on this topic?
Yeah, I think while it's not necessarily shown here, I think another sort of practical point of nuclear that's I think worth mentioning is just sort of its physical land use requirement relative to other renewable sources or low carbon sources like solar or wind. So that's one of the benefits of nuclear is actually it's a very dense, compact, and efficient source of electricity. And so what I mean by that is just really it requires it's more power with less land essentially when you compare it to many other sources of sort of low carbon or renewable power. So and actually solar, for example, requires 31 times more land than the equivalent source of nuclear would require. And for wind, it's even greater. It's over 100 times the same amount of land or amount of land for the same amount of power. So I think really one key element here is actually sort of the more practical side of it. They're all great to have, and they're all part of a good mix of a strong power grid and source. But I think from a practical standpoint, at least today, nuclear provides more power for less land use.
That's great, and all of those factors I think have led many governments and regulatory authorities globally to re-examine their position on nuclear power. I think we're all familiar with 2011 Fukushima natural disaster causing a massive disruption and tragedy really around nuclear in Japan. And so post 2011, a lot of attention moved away from nuclear and went toward other renewable energy sources. And a lot of that has reversed in recent years. This is just a sample of some of the countries that have either re-examined their position on nuclear or just decided to invest even more in recent periods. So we'll talk a little bit more about some of these, but in the U.S. there's been a heavy drive for expanding the life of the existing fleet we have here in the U.S. as well as many different innovations. Japan, rightfully so, is a very cautious participant in nuclear at this point, but they have taken steps to reverse the decommissioned reactors. They're looking into bringing more back online as their kind of energy independence continues to be at risk. China is a really important story in the broader nuclear theme here. I mean, they've invested the most in nuclear energy. They have many reactors currently being built, with others planned, soon to be probably one of the, if not largest, one of the largest nuclear producers in the world. So that list goes on and on. There's been a lot of policy support behind this trend, and not all of it has happened in the last year. I mean, that's when, ultimately many headlines might trickle through and we start to hear more and more about investment, but many of these are years and years in the making. So this isn't I would say this isn't a near-term phenomenon. This has been playing out as this energy transition has been at the forefront. Governments, regulators, et cetera, have realized some of the potential drawbacks or limitations with other renewable energy sources, and realizing that nuclear just fits in the future of a cleaner power supply. So that would be, in my mind, the third key driver or investment case behind nuclear. You've got increasing electricity demand that needs to be met with a clean and efficient power source, nuclear, and there's a ton of policy support behind nuclear. So really key drivers. But let's drill into this third kind of case, which is this policy support, because there's so much in the news as recently as yesterday in the U.S. So Coulter, walk us through some of the major developments here in the U.S. in recent time periods.
Yeah, absolutely. And I think, just to kind of tee up this slide, and also kind of wrap up your slide a little bit, I think one of the big sort of initiatives that came out of one of the more recent UN climate change conferences was actually a nuclear specific sort of declaration. And essentially what it was the US, as well as over 20 other countries, they signed this declaration to basically commit to tripling the nuclear energy capacity by 2050. So I think that right there speaks to sort of how, nations are beginning to look at nuclear power and how it fits into, the future of energy generation going forward. It really is quite the, the declaration is, a tripling of capacity, in the next, call it 25 years or so. So I think that's a big one to at least highlight. But yeah, more specifically within the US, and just to sort of note here, the US, many people may not realize it, but the US has actually been using nuclear power for 60, 70 years. Actually, the first nuclear power plant in the US came online in 1958, right outside of Pittsburgh, actually. So this is technology that we've been using for a long time, and we actually built most of our nuclear power plants in the 70s and the 80s, basically. But since then we kind of stopped. There's been a long period of time within the US where we're the leaders of nuclear power. We produce the most amount of nuclear power in the world, but we haven't really built any new reactors or facilities really in several decades. Granted, with the new Vogtle reactors 3 and 4 that came online just in the last couple of years in Georgia, those were the first new power plants in the last 30 years essentially within the US. So this is really sort of a big re-embracing of nuclear power within the US. And I think just to kind of highlight, it's coming from multiple ends of the spectrum, right? So we're getting, supportive legislation and policy support from our key leaders here in the US. And so you're seeing things even just, as part of the Inflation Reduction Act that was passed a couple of years ago, nuclear was a part of that. And so there's actually provisions inside of that act that help preserve existing nuclear power plants and provide extensions, as well as sort of help, incentivize, future development, and even bringing back online prior shuttered plants, which we have several of that we can speak to a little bit coming up near next. But so I think, on the policy side, we're seeing support, in the past, in the present, and, signals from the UN declaration that they plan to continue to support nuclear energy going into the future, the next 25, 30 years or so. So some other recent developments, and I'll get to a couple that aren't even on the slide, because like Brandon sort of mentioned earlier, so the news around some of these developments have really kind of come out. There are almost every other day, it seems that there's some sort of big announcement coming out about someone's, commitment to invest in nuclear power or bring back online, a previously shuttered plant. So just a couple of examples, and I think some of these you may have heard already. They're kind of circling the news a bit, but I think the big one is 3 Mile Island. That was sort of a big quintessential. That was actually that 3 Mile Island incident was actually sort of the precedent that sort of hampered the sort of advancement of nuclear in the U.S. for several decades. But just recently, just last month, it was announced that Microsoft was partnering with Constellation Energy, which is the largest nuclear power utility in the country, to bring back online the 3 Mile Island, the one reactor at 3 Mile Island, bring it back online and start producing power for it. I think we're also seeing it elsewhere. Diablo Canyon was actually scheduled to shut down and decommission here, and now they've actually applied for extensions to keep it open longer through 2030 and possibly even beyond. We're seeing Palisades in Michigan. That was another reactor that had been shut down. Now they're working to bring that back online. Amazon, they're in this game too, right? So they recently purchased a nuclear powered data center that sits right next to the Talon Energy plant, which is utilizing nuclear power. And so they're trying to find these data centers that are next to and connected to these nuclear power sources that are clean and reliable. And then I think also worth noting, just on Monday of this week was Google basically coming out and announcing that they had made an agreement with Kairos Power, which is sort of an advanced small modular reactor, company that's working to put on the newer next generation of these small modular reactors, which have a lot of benefits to them. Google came out and basically announced that they are planning to buy, or an agreement to buy power from these Kairos small modular reactors once they do come online. And then even just yesterday, there was the big news about Amazon and their partnership with Dominion Energy and their $500 million commitment to invest in the development of small modular reactors. So, I think there's a lot happening here. And even the CEO of Amazon Web Services basically came out and said, we see a need for gigawatts of power, in the coming years, and wind and solar projects, while useful, aren't going to meet, be able to meet the needs of this power demand. So, nuclear is, in their eyes, a great opportunity.
That's so many developments. It's really interesting because some of them are a little bit longer term, of course, like small modular reactor development, and others that probably have a longer horizon, probably will take longer to develop. But just seeing, listen, utility regulation, nuclear specifically, it can be a slow moving process. But to see something like the Palisades in Michigan that can potentially be reopened in a matter of years, a year or two. I think that's an important point, that not everything moves at a turtle's pace. Some things here can happen very quickly. So we've seen a lot of that play out. Let's talk about China, because it's like I think the elephant in the room when it comes to growth, and you have to talk about China and the broader nuclear conversation. Admittedly, harder to invest directly in China when it comes to nuclear, but they will be a driver, I think, of growth and demand and service needs, et cetera.
Yeah, certainly. And I think what this really highlights is the fact that, while sort of the news that we're hearing, as you mentioned earlier, Brandon, is largely US based companies, but if you kind of zoom out a little bit and just kind of take a look at the broader picture, nuclear power is not just a US phenomenon. It's becoming a global trend. It is a global trend, actually. And I think if this slide really helps illustrate that. China, for example, they're basically the world's largest country, producing about half of the current reactors that are under construction. So that's a big commitment. About half the nuclear reactors that are under construction today are in China. So they're actually projected to overtake France, which is a very heavy nuclear power user. They're projected to overtake France eventually and become the world's second largest in terms of amount of nuclear power produced, just behind the US. So, and as I mentioned here, US is here up at the top. You can see that we are still the largest producer of nuclear power, but we haven't produced or really opened up too many new facilities in the last several decades. But I think these announcements that are coming out perhaps signal something different in the future. And I think also worth sort of a mention is India. So you're seeing, it's just, and this sort of hits back at my earlier comment about how these sort of emerging economies that are developing, they have a demand and a need for electricity as well, and they're turning to nuclear power. So India, for example, while they are, I don't know, 7th or 8th on this list in terms of total nuclear power produced, they're actually the second in terms of number of reactors currently under construction now. So that's sort of a big vote of confidence from India and China that nuclear is going to be a big part of their energy infrastructure, going forward in the future.
Awesome. Okay, so a lot of opportunity, a lot of dynamics at play, and at the top of the webinar, I stressed, the comprehensive, full nuclear ecosystem that exists, and what we strive to provide exposure to with our product here in the U.S. And I think that's a really important point here because maybe some of you on the webinar today have looked to uranium, as uranium prices really exploded post 2022 and the invasion of Ukraine by Russia, and Ukraine being a heavy uranium producer, straight through to last year as uranium prices really peaked. I think at the very beginning of this year, they've fallen off quite a bit. So there can be a lot of dynamics in this industry that are quick to impact certain segments, slow to impact others, regulatory issues that can heavily influence, say, utilities over miners. So we very much believe in a diversified, well-balanced, full exposure to the entire nuclear value chain, if you will. So that's been a very important part of our portfolio construction process when it comes to offering this index-based ETF exposure to the nuclear ecosystem. And that really comes in the form of utilities, where many other investments might overlook utilities or exclude utilities from this theme. Utilities are very important, very critical in this case, and like Coulter was mentioning, with many of the major press announcements that we've seen this year, a lot of those are tied to old school, boring utilities, and we're very we very much believe that utilities exposure has a very important part or important role to fill in an allocation to nuclear energy. So companies like Constellation, which was tied to the 3 Mile Island announcement with Microsoft, companies that you're all very familiar with, PG&E, very heavily involved in nuclear production straight through to some global companies. And then it also includes a very notable exposure to the uranium mining segment. So the largest and most well-known uranium miner, Cameco, Canadian-based company, but global miners as well, straight through from Australia to Canada and other locations. And a really important segment of growth, a growth driver within the nuclear energy industry, are these industrial companies that are heavily involved in some of the small modular reactor development, like NuScale Power, others involved in uranium enrichment, Silex, BWX Technologies, which does a lot of things within the nuclear energy industry, is a very interesting case. They received they were awarded a contract by the Department of Defense, essentially a national security pilot program around uranium enrichment, which we've kind of moved away from in the US over the years. So tons of really interesting stuff going on, and that's what I think really sets NLR, our ETF, apart from many others in the space, is its comprehensive exposure. One thing to note on exposure in a thematic ETF like this that's focused on a segment of the industry is pure play requirements. And we very much believe that for a company to be included in our portfolio, it really needs to be meaningfully involved in that space. So we're not going to get exposure to some of those massive utility providers that do, a little bit of exposure to nuclear in their broader power production story. I mean, this comes down to the utility companies that are really primarily involved in nuclear, and that generates the majority of their revenue on a regular basis. So that's really key in our construction process. So there's a lot of opportunities. We think a comprehensive, diverse exposure to that opportunity set helps reduce risks, but there are a lot of risks. So we think it's important to highlight the risks around this space. So Coulter, maybe walk pretty quickly through some of these risks, but they're important and shouldn't be overlooked.
Yeah, absolutely. And I think we've got sort of, three highlighted here, that are really the highest, risks worth mentioning here. And I think the first one is commodity prices. So when you think about the nuclear space, many people think of uranium, and that sort of historically has been what, how many folks have gained exposure to this industry is through the uranium miners. So these are, upstream commodity, producing firms. And in reality, like there can be, just like, oil or any other commodity, there can be big swings and fluctuations in the prices of uranium. And so, that's certainly one risk to mention. certainly, in terms of, there's been a lot of kind of concerns too around geopolitical risk in terms of uranium, and much of that comes from Russia and Kazakhstan. So even the supply and demand factors of uranium can lead to even increased volatility that is worth being aware of. I think also regulatory risk. Obviously, this is nuclear power, right? This is this is a force to not take lightly. So because of that, there has always been a very heavy presence of regulatory oversight in much of this industry. So that is worth noting as well. And then also, of course, these are all equity, equities of companies involved in the nuclear industry. So there always is sort of a market equity risk that is worth noting. And these in broader market downturns, these can be impacted along with the overall market.
All right, we are running out of time, and we've got a lot of questions. So maybe we can talk very quickly about what the comprehensive exposure in the eyes of risk-adjusted results has given investors historically. So Coulter, here we have the underlying index to our NLR ETF compared to an index more focused on uranium miners. What are the key takeaways here?
Yeah, I think the biggest takeaway here is, and if you look down at the bottom, sort of the green highlighted areas, I think this is where we sort of highlight both the return, but also the risk, and as measured by volatility or the standard deviation. And as you mentioned earlier, sort of the holistic approach of targeting all of the full value chain of nuclear industry, from the miners upstream all the way down through to the final output utilities that are sending electricity out to the grid, to homes, as well as those industrials that are developing those newer future generation modular reactors. That sort of comprehensive exposure, I think, has led to a better risk profile. You're still getting the return and exposure to the industry, but you're getting a lower volatility profile that goes along with it. And I think a large part of that is due to those utility companies. And so what that has meant basically is, for the broader universe that includes all of the various elements of nuclear industry, you get a better risk adjusted return. So you get a higher Sharpe ratio and lower drawdown as well when the market does take a downturn.
And I fully acknowledge that a lot of investors are looking for risk, are looking for volatility, and some have looked to the uranium mining segment for that, and that is fair. And so admittedly, an exposure like our NLR ETF will lag if uranium prices are really exploding. It tends to lag because of the utilities exposure. But over cycles, we've seen some pretty attractive risk return characteristics. So just a few points on our ETF. What many might be surprised to learn is that this ETF, in its form as it exists today, has been around since 2007. Like I said at the top of the call, we try to identify trends and offer these intelligently designed portfolios that will be available to investors as these trends unfold. And of course, there's been some hiccups along the way. We talked about a few of them, like Fukushima on this call, but this ETF, which is catching a lot of attention now, has been around for quite some time, has been run in a very efficient way, offering very global exposure to this nuclear energy segment, diversified across utilities, uranium miners, and many of the innovative industrial companies. My closing thoughts before we open it up to a few questions that we've gotten is really simple. There's a very compelling long-term structural investment case for nuclear and investment in that space, and that is, we've got increasing electricity demand. There's a lot of technological advancement that needs to be powered, and it needs to be powered in a clean and efficient way, which nuclear offers. And as a result of all of that, it's driven policy support to support growth in this segment and investment in this segment. So there's a lot of interesting dynamics that we think will play out moving forward, and time will tell. So let's jump into Q&A. We allotted 30 minutes and we blew through that time period, so we're certainly respectful of everyone's time. But if you have time to stick around with us, we're going to cover a few questions that were submitted before the webinar, and we've gotten a bunch in throughout our discussion. So maybe okay, let's start off with Coulter. Maybe I'll throw this one over to you. We got a question in on how have geopolitical factors impacted the nuclear industry historically?
Yeah, I mean, I think that's a great question. It's one we get fairly often because some people realize, but many may not realize it is the fact that the fuel for nuclear power plants is uranium, and much of that uranium actually comes and is sourced through Russia or Russian influenced countries like Kazakhstan. In fact, the global uranium supply of both mining as well as there's processes that are needed in terms of enriching and preparing that uranium to be used inside of a nuclear reactor to produce electricity. Much of that supply chain is actually through Russia or Russian influenced countries, about 40%. So a big part of this is and obviously given Russia's aggression here over the last several years and their invasion of Ukraine, there's been a lot of questions around what happens to the supply demand side of uranium if for whatever reason we're not able to source this uranium from Russia anymore. And in fact, there's actually been the U.S. has actually placed a ban on buying the uranium exports from Russia. And while it's a little bit liberal in the sense that it wouldn't force any nuclear plants to close if they're not able to get it from anywhere else, but basically there's this initiative now to kind of shore up a little bit this uranium supply. So, and I think even just, it was perhaps a month ago, Putin was actually cited saying, he was considering, or he'd sort of threatened a little bit, the curtailing of uranium exports to Western nations. So this is certainly something that it is out there and being discussed. And so I think that's why you're seeing recently a lot of, these legislation that's been passed recently. I think most notably in the Advanced Act that was just passed in June this year. There's actually a heavy support within those to help bring online, Western, nuclear processing plants and mining plants as well. So, it's certainly a big part of the uranium supply, which is used as the fuel for these nuclear power plants.
All right, cool. I got two different questions that I think touch on the same one. I'll take a stab at it. Feel free to chime in, Coulter.
Yeah.
One we received in advance was with the run up in prices, is NLR too expensive now? And I think Russell also submitted a question: how much of the future demand do you think is already priced into these securities in NLR? And I think it's a great point, and I think we all should be obviously very cognizant of valuations as we look to spaces, especially those that are finding their way into the headlines. I would say a couple things. So utilities, mining companies, these tend to be cyclical companies. They tend to be more value oriented. They tend to trade at pretty low multiples. So you're starting to see some of the utilities companies involved in this space take on more of a growth company kind of dynamic. So being aware of that is important, but also remembering the future growth that's ahead can also should factor into your assessment of ETFs and individual companies, and just knowing and looking at and seeing the intended investment, not only by these utility companies but by companies using that power like big tech. 500 million announced yesterday by Amazon for their web services power needs. I mean, these are investments that are long-term investments. They're not, looking to get small modular reactors up and running in 2024. These are years-long projects. So I think there's a lot of long structural demand here. So it's a risk. I think everyone should be aware of investing in a space that's run up, but I think there's a lot of tailwind as well. So you kind of have to balance those risks with the potential growth. All right, this one's an interesting one. It's come up actually quite a bit in recent time period because we're talking about nuclear being clean, right, Coulter? But there's also another component to nuclear, and that's spent fuel. And there's been a lot of innovation on uranium recycling and reuse. But the specific question is, if you consider the land that must be protected to store nuclear waste, how does that factor in land safety and preserving land safety? And I guess maybe the comments you made about kind of the general footprint of certain power sources. I know there's a factoid on in the there's 50 plus years, or I guess
Yeah.
there's even more, how much spent fuel there is in America is startingly lower than you might expect.
Yeah, that's absolutely right. Yeah, and I mean, the stat is that over the 60 plus year history within the U.S. at least of nuclear power generation, you could store all of the nuclear waste from the 60 plus years of all of the nuclear facilities in the U.S. In the area of a football field, I think it was 10 yards high. So if you think about it's 60 plus years of nuclear production, and the U.S. is the world's largest nuclear producer. So it really is not that much. And much of it nowadays is just stored underground or on site at these nuclear facilities and heavily guarded. But I think the one really important part of this story specifically, and Brandon sort of alluded to it, is the fact that the spent nuclear fuel that we store now is actually very highly recyclable. And while in the US, we don't actually do that, we don't recycle any. There's actually a ban on recycling spent nuclear fuel that was put into place, I believe, by the Carter administration in the 70s. But ultimately, they had some concerns around, when you recycle this uranium, and the security concerns around, perhaps adversaries getting a hold of some of this material that could be used potentially in weapons. But I think the stat is actually spent fuel is actually still has about 90% of its useful productivity, even after 5 or 6 years of being used in a nuclear reactor. So this is, once we're able to, and we probably will, I would imagine at some point in the future, is we have this large stockpile of spent nuclear fuel that we could begin to recycle. And I think you're seeing it done elsewhere. I think France is notably one of the largest recyclable countries utilizing that sort of technology to reuse this spent fuel. So while the space is not that large in terms of 60 plus years, I think even more importantly is the fact that it's up to 90% recyclable as well, once we sort of pass some legislation and begin to set the processes around that within the US.
Yeah, I mean, some of the innovation too is really kind of is fascinating. If you look into some of the holdings of our ETF NLR, whether it's NuScale or Oklo, which was just added this past month at a typical review, it's some of the stuff they're doing with small modular reactors, and altering the state of uranium to work in those types of applications is really incredible. I'll take two questions, I think, that are kind of tied to portfolio construction, specifically to our ETF. One is, why is Vistra not included in NLR? We received that before the webinar. Vistra is a large power producer with a very large nuclear profile. And then a question came in from no name, our guest. What is the mechanism of including new companies in the portfolio? So I'll just cover that very briefly. We offer an ETF, NLR, that tracks an index. It's a rules-based index. It's very systematic in its application. It's not an active fund. There are no human subjective decisions that are made. We are simply seeking to track and replicate our underlying index. The underlying index considers nuclear companies. And I mentioned this earlier, companies have to be pure play to be added to the index. And that can happen 4 times a year. Every quarter, the index goes through a pre-scheduled review in which it assesses the eligible universe and identifies those companies that are generating more than 50% of their revenue from that nuclear energy ecosystem. So predefined rules are how companies are added to the index. I just mentioned Oklo, which is an innovative kind of small modular reactor company that was just added in September, became large enough, liquid enough, and generated enough of its revenue from this space to be added to the portfolio. So that can happen, and I think that will happen more and more in the coming years as these innovative companies grow, are spun out of other companies, or IPO. The Vistra question, why is a company like Vistra, which has been heavily followed in the nuclear conversations, not included in our portfolio? That relates to pure play. So it's a major player in the nuclear space on the utility side. They're one of the largest generators of nuclear power. But we want to ensure that companies that are included in our ETF are heavily influenced by nuclear. And don't get me wrong, Vistra will be influenced by nuclear, but the majority of their power generation comes from other sources, namely natural gas. So we want companies that are primarily engaged in a particular segment to be in our portfolios, as opposed to those that might be major players but can be heavily influenced elsewhere. So that hopefully will answer why a company like Vistra, GE Vernova, which is a spin out from GE earlier this year, which is involved in all sorts of clean energy aspects. That comes up from time to time. They're not a portfolio holding, even though they're pretty heavily involved in nuclear. So hopefully that answers your question there. Okay, one other point, and I'm not always the best at handling political questions, but this one I think is pretty straightforward. Russell submitted a question about the US election that's forthcoming. Many different areas of our markets are waiting on election results to see what might happen. Crypto is a huge space that could be influenced one way or the other by the election. Is nuclear susceptible to pros or cons depending on the outcome of the election? Of course, I think there's going to be different policy points and positions taken by whatever administration is elected. The outcome of the congressional outcome, whether it's a split Congress and depending on the party affiliation with the presidential election outcome, can have a lot of implications. But what I will say is, nuclear has historically been a bit of a partisan issue. It has a very much an environmental component to its ethos, and in the past, many Democratic politicians have been a little bit anti-nuclear, but in recent trends, we've seen that really change. Coulter mentioned the Advance Act, which was a component of a larger bill just this year that was passed and signed into law. That had overwhelming support out of the Senate. Of course, nuclear is a major component in the Inflation Reduction Act from back in 2022, which was signed by a Democratic administration. So I do think there's more and more support across the aisle moving forward in nuclear. So we'll see how that plays out in just a few weeks here. Okay. All right, we planned on going about 30 minutes, and we're at 45. So I think we're a bit over on time. There were a few other questions that came in. Some of them are very specific to platforms, brokerage platforms, and others where we may choose to reach out as a follow-up to try to answer some of your questions directly. But I thought this was great. We just thought we'd pull this webinar together because it's been such a hot topic, not only in the media, but with our clients and investors of all types. So we're very happy that we were able to host this. Hopefully you learned a few things. If you do have any questions, please do not hesitate to visit our website. You can find contact information on our website at vanek.com. You can sign up for insights around this theme and others at vanek.com/subscribe. So very much encourage you to do so. And with that being said, I guess we can wrap up and conclude today's webinar, today's presentation. Thank you so much for taking time. I know you're all very busy. We really appreciate it. And Coulter, great stuff. It was great talking with you today.
Yeah, it was a great time. Thanks for having me.
Bye, everyone.